Market update for the 10th, middle of the day. So we got the pump, a little bit different than I thought would happen, but I thought it would go higher, but I didn't think it was going to happen in this way. But I'm sitting here on the dollar chart because I want to show you where we're at. And this is very interesting because I think we're pretty close to being finished with this move. We have A, B, and then we have 1, A, B, C, 2, 3. And so we're looking for a fourth wave somewhere around 105.04, which is exactly where we're at right now. Maybe on a smaller time frame we can see. So that's where we're at right now. If we take the fib retracement tool and we go to the top of where it's at right now, the targets are 103.92, 103.68. And the way this has happened, it started on the 5th. We're at the 10th right now. I would expect this to finish most likely in the next couple of days. Maybe they can stretch it out to OPEX. But that's a very interesting look as far as the overall market goes. So zooming out here, if we go to the weekly chart, you can see we've been in this fourth wave correction for a while now, since July 11th or July 14th, and we're very close to getting that red candle I've been talking about. Why is this important? If you haven't watched my videos before, because once we bottom out for that fourth wave, let's say it is 103.92, the next move should take us up to a minimum of about 114 based on fibs. So I would be looking for 114 for a fifth wave. It looks like it's a pretty quick fourth wave, only about a month. And when we move up here, that would be catastrophic for the market, because this is where we were at when we were at 362. Add another 5 points on that, it's probably going to take us to the low 300s. And if somehow this doesn't happen, I'd be very surprised. But zooming out as well, you can see that when we do get to that level, that will be the end of a cycle that started in March of 2008. And so 1, 2, 3, 4, 5 up here around 114. And then the correction would take us to, after that, would take us to all the way to 92. So look out for that. Dollar fourth wave about the bottom. SPY looks like it is in a second wave, if you ask me. This could be the end of it right here, but this looks like a corrective pattern to me. And so I would guess we probably get a few more moves higher. Knowing the exact target based on that low of a time frame is not very easy to say, but I would go with a minimum of 422, 424, something like that. Let's see what the fibs are saying. Sorry about the echo. I'm in a workroom at the Airbnb I'm staying at. So 422, and then back down to 421, and ultimately somewhere around 423 to 424, something like that would be a pretty good target. So a little bit more upside maybe in the overall market, but it doesn't have to be. It could be finished right here. Dollar has a little bit more downside, so that gives me hope that SPY will probably go into the mid 420s. And I have a trade currently on Apple. I bought in kind of late, but I think that it can go all the way to 170. So I have a very small position on that with a pretty tight stop. So I'm looking for about 170 on that. SPY to 423, 424, and the dollar down to 103.92. VIX, we're all the way down at 1988, and as I've said before, this is potentially just like a second wave. You look at the monthly chart. So where do you think the third wave is going to take us? Well, it could. My target's like 55, and look at that. The 1.61 fib of that is around $55 or 55 points or whatever. So those are the VIX, the dollar, and the overall market. A little bit more upside, a little bit more downside in the dollar, and then the VIX will probably stay put for a couple more days, up to another week or so. And Apple, I'm looking for about 170 or so. So just wanted to give that update to show that there's still a little bit more upside, but not that much in my opinion.